to our next panel discussion on technology in the financial sector, opportunities and challenges, for which I would like to invite the moderator of the session, Sri Madhav Nair, Country Head and CEO India, International Banking Group, Mashreq Bank, and the elite panel joining him on the days are Sri Anshuman Bhaduri, SVP and Head, Digital Experience GIB and CSE Business, HDFC Bank Limited. Sri Avinash Raghavendra, President and Chief Information Officer, Axis Bank. Sri Jinesh Jain, Digital Lead at Mahindra Group Technology Office. Sri Rajesh Mirzankar, Managing Director and CEO, Kia.ai. Sri Shehzad Fatmi, CEO, Settlement India, Belgian CBDC. Kindly take your seats on the dais.
Good afternoon, everyone. At the outset, I would like to thank Sri Anant Singhania ji, President IMC, Sri Arjit Basu ji, Chairman Banking, NBFC and Finance Committee, Dr. Narendra ji and Mr. Thakkar ji, Co-Chairman of the Banking and Finance Committee, Mr. Ajit, Director General of IMC, as well as the IMC team led by Bharti, who have been really helpful in sort of putting this together. The topic for us today is technology in the financial sector, opportunities and challenges. So the way we would like to structure this is that we would have, the session is for almost an hour, so we'll have around 45 minutes of panel discussion and we'll have 15 minutes of Q&A session. The great futurist Alvin Toffler said, "The future comes too fast and in the wrong order." It's so true. The last decade has seen a surge in the technology-driven innovation in financial services, and the sector is actually undergoing a paradigm shift in the way products and services are delivered to its customers. This is also due to the changing demographics and expectations of the millennials and the Gen Z customers. We have also seen that the government of India has put in a robust digital public infrastructure in place. The minister himself spoke about the success of Jam Trinity, and of course our homebred payment solution UPI has been a remarkable success. We are also seeing a transitioning of the telecom sector from 3G to 4G, and we are also speaking about 5G. And something which we might be wanting to touch upon would be the urban-rural divide, which is also sort of being seen in some pockets. So my personal view is that technology will continue to transform the financial services space with innovations driven by a host of factors, and key among them would be some kind of next generational technologies led by Web 3.0. So in today's panel, we'll try to cover how the next decade will look like and discuss the next wave of disruptive technologies in financial services and the associated opportunities, risks and challenges. So my first question to the panel is, there's a lot of buzz regarding digital transformation and client engagement within banks and NBFCs. Neobanks seem to be positioning itself as a popular financial platform for the millennials and the Gen Z who wish to access information on their smartphones. So I would like to solicit views from the bankers as well as from the service providers on the journey so far. So I will start off with Anshuman. Your views on this particular digital transformation.
Thanks, Madhav. First of all, the kind of eminence and experience in this room is humbling. And I thank IMC for this opportunity to be here today as part of the panel. As an answer to that question, I I came across a very interesting snippet some time back, which states that people need banking, not banks, right? And as a service, and people now need it on their smartphones. That is our Gen Z and our millennial population. On the other hand, there is the vast, underbanked and unbanked population among senior citizens and the suburban and rural population, where, getting the customer to the bank is extremely difficult, if not impossible. The bank has to go to the customer. So this is both a challenge, and if we have to transform that into an opportunity, then technology and banking are inseparable, right? They are closely coupled, because without technology, none of these objectives can be met by banks. In terms of neobanks, yes, they are making a position for themselves, which is very heartening to see. But for traditional banks, a pure play digital approach may not work if it has to meet the requirements of financial inclusion that we have. So it will be a mixed model in my mind, which will be digitally powered, but it cannot take the brick and mortar out of the banking system yet. How it emerges going forward is something that we will have to watch for.
Thanks, Anshuman. Jinesh, you represent M&M Finance. So if you could share your thoughts, specifically because you go pretty much on the financial inclusion space. So your thoughts on this?
Yeah. First of all, thank you for having me here. It's a pleasure being here. And Madhav, very relevant question in today's context. I mean, last decade or so, we've seen unprecedented revolution. And this is underpinned by the India stack, as you referred, JAM, Trinity. And let me expand it a little bit, because, JAM sometimes can become very narrow. The India stack has three specific layers. First one is the identity layer. Almost every Indian has a digital identity card today, and that enables eKYC, e-sign-in, and the digitization of the banking journey. Next one is the payments layer, the UPI, not just UPI, but also Aadhaar-enabled payments, biometric payments, which has been a great supporter to drive further financial inclusion. And the third one is the data part, which is consent-driven artifacts, DigiLocker, account aggregator. Now the ecosystem that Government of India has put together, which is further getting strengthened with the help of OCEN as well as ONDC. And this is penetrating really deep into rural India. Out of 800 odd million people who have access to internet today, only 35 to 40% of them make digital payments, which means we are yet to penetrate in the real Bharat. And that is what we are trying to do at Mahindra Finance. For us, the focus is rural and semi-urban customer segment. There are pockets in rural India where you will have dark zone of network, and the field app that you will give to your correspondence will not work. Therefore, we have enabled technology which works offline. There are offline mobile apps as well. And the moment the person is back in the zone, it starts syncing the data and start issuing the new statement of accounts, etc. Therefore, it's very important that the journeys that we are designing stays physical, make sure that the last person in the last row gets included from digitization perspective, while technology has the capability and acceptance to go fully digital, but we need to make sure that we are equally physical, at the same time equally physical also, to penetrate and drive financial inclusion. Beyond this point, we will have to continue to work on financial awareness, keeping in mind developing trust in the ecosystem. Trust is an important issue, and at some point in time we'll talk about it, but technology is the only way to go last mile, build trust, and enhance financial inclusion from where we are today.
Thanks, Jinesh. Rajesh ji, you head a large software company, and most of the banks and NBFCs are your clients. So what's your take on this?
So how we've seen the transition of digital from where we started off in 1995 till date, it's a long journey, where you had branch banking heading to core and then moving on the focus to consumers, customers of banks. What we see today, to just summarize, and we've heard from Anshuman and Jinesh about the digital front ends, we see a transition from what we see as an era of device-driven open banking to an open finance era, So if you look at the transition of what was UPI initially introducing open banking to India from a perspective of any bank being operated through an app, that being made a very important step was the launch of BHIM, because that allowed the small banks also to participate in this. Classically, if you've seen the implementation of open banking, for example, in Europe, it has been restricted to banks introducing more interfaces and the smaller banks just focusing on the mandatory 3 or 4 interfaces required. So in India, I think the aspect of creating the foundation has also come with responsible execution by the regulator as well as the super aggregator NPCI of releasing BHIM and areas such as that create a level playing field for digital economy. That in itself has ensured that the smaller banks or the NBFCs etc. don't get left out from the journey, where it gives a advantage of just those who can afford bigger servers. The next point is about how the open banking then transitions into open finance. If you look at the concept of account aggregator that has come through, has allowed for non-banking financial entities also to participate. The aspect of the Aadhaar, etc., the identity being available to NBFCs and others as participating areas to use a digital identity to onboard is a very important step. Now, transitioning from there, how we see this going forward is with the introduction of ONDC and the maturity of ONDC going forward, it will come up with a concept of open economy. So this transition of open banking to open finance to open economy will be something that will truly determine India as a one of the biggest forces in digital economy worldwide. I think we've seen how UPI is now heading to 18 countries, and I'm sure a lot of the European countries will start looking at how UPI success has driven rural penetration as well. But I think the ONDC model is truly a defining point. We may not have seen the sort of acceptance in terms of volumes on ONDC today, but going forward where you see multiple technology changes like Web3, etc. coming through, you will certainly see a huge upswing in the ONDC volumes as well.
Thanks, Rajesh. I think you touched upon UPI. I think UPI, I think everybody would agree, has been a phenomenal success. It was one of the greatest innovations, and the kind of volumes it has seen. It's also, like you rightly mentioned, it's seen some cross-border. Many countries have started adopting UPI. So my question to the panel would be, what next in the face of UPI's growth story? So I will ask Avinash for his views.
Thank you, Madhav, and very good afternoon to all. It's a pleasure sitting in front of this eminent audience. UPI has been a phenomenal growth story, and I think from a financial services standpoint, the biggest item that any customer ends up looking for is the ease and the efficiency in terms of making payments, and that is where I think NPCI, the entire India stack that my co-panelist basically mentioned, has done a phenomenal job. Okay, what we are essentially seeing right now is how do you enable more and more stuff on UPI, right? I mean, the payments part is already taken care of. What is now happening is that, okay, cross-border remittances. One very important element which could actually become a game changer is enablement of credit via UPI. Very recently, Pay on UPI has also sort of gone live. These are fundamental changes which is happening in the ecosystem. I mean, credit via UPI will basically enable credit not only to those who are actually doing transactions in the urban centers, but also to the needy, right? Because the low ticket of the credit enablement is what is actually lacking in the so-called Bharat segment, which is where, the UPI can actually become a game changer. From a technology standpoint, I think the basic backbone is already there. Most of the banks are ramping up their infrastructure in terms of managing the UPI volumes. If you were to look at the technical decline rates which banks used to have about a couple of years back on a year-on-year basis, I mean those metrics have actually come down dramatically. The top 4 or 5 banks, I believe, they are hovering at somewhere around 0.10, 0.20 kind of a numbers. Okay, and every bank that I speak to, you will find that, okay, there are some moves afoot in terms of taking the entire UPI stack to the cloud. The idea is to add resilience, the idea is to add stability, predictability as far as the customers is concerned. So the UPI story is going to continue to grow. I think it is only going to sort of, get into more and more functionalities. And this is one of the best things which has happened to the country. I don't think we should sort of challenge it. We really have to be innovating a lot more in this stack.
Thanks, Avinash. I think you also touched upon briefly that the UPI growth story also means partnerships, especially banks collaborating with fintechs. Should banks see fintechs as competitors or collaborate? There have been a lot of discussions on this. So I would like to ask Shehzad, how do you see the bank fintech relationship?
Thanks, Madhav. Good afternoon, everyone. Really nice to be here. So, my background from banking gives me a good perspective to comment upon. Okay, fintech is something which enables the banking sector actually to provide services to the last person in the bottom of the pyramid actually. So they complement, do not compete against each other. They are actually complementary to each other. I'm sure UPI actually, when we talk about the UPI, tech stack has been developed by different technological company, but it is being used by the financial sector. It is not used, and the benefit is actually being accrued to the end user. And we should not forget why any technological innovation which we talk about, whether it's AI, ML, blockchain, or cloud, or anything, whether it's consumer facing or non-consumer facing. Okay, what is the end goal? The end goal is to provide the service to the consumer actually, and that way I don't harbor the opinion. I don't go with the opinion that they are competing against. They are actually complement each other, and that's going to be the future also. It has been in the past. It will be in the future. ATM, there were 2-3 companies which made the ATM, and it was adopted by the bank, and it has benefited. You don't need to go 5 kilometers to withdraw 500 rupees now. Okay, you don't. You now, initially you carried a debit card, now you carry the phone, and then money is on your wallet. Yeah, so it has to be complementary.
Thanks, Shehzad. The reason why I also asked was a lot of CEOs have been saying that, are we a bank or a technology company? So, Anshuman, first you and then Jinesh, how do you see the bank's fintech relationship growing?
See, these are two hands clapping together, right? You cannot separate one from the other. There was this initial understanding or concern as to how fintechs would play out in the traditional banking space. However, we have seen so many examples where we have partnered with fintechs and that has worked so beautifully for the bank, right? For example, a very small example is, let's say, an API aggregator kind of a fintech. For example, let's say a Karza. Who doesn't use Karza today, right? There is so much possible through public APIs that are available in the space today, so through internal APIs. And fintechs have, kind of helped us get our API act together in maybe a fraction of the time that it would otherwise take for a traditional bank to, build on its own. So that was just an example. There are, for example, account aggregator fintechs, right, who help you aggregate bank statements from various banks with a very robust consent architecture, obviously, from the customer, and then slice and dice that bank statement data in order to give you intelligence with which you underwrite loans, for example. Right? So there are multiple and many use cases where fintechs and banks have come together, and they have created what otherwise would take maybe a 3x kind of effort and time, and they have helped banks to become quicker to market from a competition point of view. So, it is no more a debate really in my mind whether you call yourself a bank or you call yourself a fintech. you will have to have elements of both to be sustainable in the BFS space today. There is no reason why we should take them as competition, because in every sphere that we coexist, we have found successful partnerships there, and we will continue to do that. That is my opinion.
Although I feel in the ecosystem, all entities have a very specific role to play. You know, banks traditionally have got an array of products allowed by the regulatory framework. They have a strong brand name which draws the trust of the consumers, as well as the strong geographical reach. Whereas NBFCs have built their businesses by lending to a customer segment, which otherwise, you know, banks were not willing to lend earlier. So lending credit to deserving but underserved customer, and also providing last mile connectivity through their specialized model, customized product, flexibility in the talent policies, etc. And whereas fintech came up, you know, they introduced agility from the tech perspective, and their speed to market, innovation, ability to analyze data was so unique that, you know, while initially it seemed like some of the customer segment will be taken over by them, but eventually the model has been settled that, you know, partnership is the way to go. What a typically bank and NBFC can do, fintech cannot do, and vice versa. Therefore, partnership model has evolved quite well across the end-to-end customer journey. As some of my fellow panelists said, there are numerous partners each of the bank and NBFC has, at least 30 to 40 partners, bare minimum, all of us have been working with to digitize and automate the journeys. At the same time, what is the innovation that we can do? So co-creation and co-innovation for the customer segment, which is being facilitated by Open APIs platform today. So the concept of open banking that we talk about, a lot of entities have opened their API where fintechs can connect, test and develop the product, and then together, you know, we can go to market live. I would also like to include big tech in this definition, because big tech is at the same space where fintechs were a few years ago. Big tech seems a threat today, and they could potentially be, but regulators have done well to keep a tight watch on what big techs can do. But all the financial institutions are also customers of big tech, right? I mean, everybody uses either Google, Amazon, or Microsoft Cloud, Azure Cloud. And there is a lot of partnership which is going on with big techs as well. Today at Mahindra Group, we have partnership with even OpenAI for Microsoft to have our firewalled ChatGPT instance exclusively for employees. So partnership is way to go. There will be some friction in some segments, but the long-term goal where everybody will flourish.
Thanks, Jinesh. Definitely, I think the panel is unanimous that they will coexist, and it will be greater partnerships in future. We have seen Web3 as the next evolution of web-driven technologies. It will actually transform the way people and the users manage their digital footprint, make customer experience more immersive, and it will also assist financial services to leverage technology. McKinsey research suggests that this could actually generate a revenue of 5 trillion by 2030. So I would like to ask the panel, is Web 3.0 and Metaverse the future of finance? So Rajesh ji, your thoughts?
Certainly Web 3.0 is the future from a perspective of next generation technology in terms of customers, and importantly allowing them to own their data. The concept of creator economy also has been clearly spoken about, and corporates especially from a perspective of digital participation will want Web 3 to evolve better to be able to manage a lot of their data and also have data transparency with those who finance them, like banks, etc., with that data, providing consent that they control. Now, when we look at the concept of metaverse, I just want to point out one thing, that I don't see the fortunes of Meta determining the fortunes of metaverse. So it is like saying that, you know, one human cannot determine the outcome of mankind. So with that disclaimer put in place, I want to say that there are several players in India, especially as an economy, in Web3 environment, and metaverse as a technology, I'm very sure, will be led by many Indian companies to then take up a sustainable digital economy in a world that is going to be very fast with 5G involvement, a world that is going to interoperate very well with IoT, such as, let's say, a concept of a QR code or barcode getting replaced by a smart chip on every consignment, which will ensure that the data is available to the bank who's financing the LC by making sure that on the blockchain it has seen that this has crossed the customs. Just a simple example. Now, how far is that age? From the point of how smartphones came in and for someone to introduce a mobile banking app, if you take that as 2 years, and then for UPI to then evolve in, let's say, about 8 years to 9 years of that time, you know, you will suddenly see a huge surge of how Web3 will get adopted by corporates, by the world as such, and how Metaverse will lend itself into enabling a visual front end to that. One of the reasons I feel Metaverse will be a success is for the reason, of course, we have a platform called Bharat Meta that we launched. We've already onboarded a few banks on that. In fact, we have a joint venture with one of the foreign banks, ventures rather, not banks, foreign ventures, where it is creating India's largest entertainment and commerce hub. And the enablers to this will be obviously the aspects of UPI, the aspects of ONDC, etc. But a very important disclaimer, there will be no crypto. So when I say Web3, with the single breath, I want to assure that crypto has, I would say, in the commerce industry, especially in India, because had the Reserve Bank of India allowed for crypto to come in, you would have seen a huge hue and cry about how fortunes were decimated over a few hours. So when we look at the concept of Metaverse, it is something I clearly see being driven by the layer of CBDC, a layer of conventional finance enabled by UPI and other means, a layer of interoperable standards coming out, and this in itself will render a higher user interface.
Thanks, Rajesh. I think that takes me to the next question, which is on blockchain. Blockchain has shown a lot of promise in financial services, but it still seems that the adoption is low. And also, there is a raging debate on CBDCs versus crypto. So, Shehzad, you being an expert in this area, I'd like to hear your thoughts on that.
Thanks, Madhav. I agree with you that blockchain has been in, coming of age technology for the last like 8-10 years. And the problem was actually that it could not find a killer app. When you see the evolution of technology, you have always seen that there was an app which made the technology adoption. Like when you talk about the internet, it was mass adopted by the email and then the facility, web browser and all. Okay. Fortunately, in the last couple of years, we have seen the use cases which has come up and which has the potential to propel or catapult the blockchain technology. One of them is CBDC, and thankfully, India is at the forefront. RBI has a close user group in the retail. Initially, it started for the wholesale CBDC, and then in December also it started for the retail actually, and it is going quite well. NPCI as always has developed a very robust, the backend for that. As per a recent study by the Citibank, it says that by 2030 or so, there will be more than $5 trillion worth of CBDC will be in circulation in the economy, including India, different economies, not only in India, and then the second use case, which in my opinion has the potential to be adopted massively, is the tokenization of asset. You can tokenize any asset, but there are certain which has a ready to be adopted, all the benefit which tokenization gives, and that is already that is there in that use cases actually. And when we talk about the tokenization, we talk about, your rights, illiquid asset. In the last panel, they were talking about the MSME not getting finance, and then so the tokenization can actually help the banking industry to reach to those people who has been unbanked actually, or provide timely credit to the MSME or micro finance institutions actually. So in next 1 to 2 years, which I suppose the blockchain will have its moment, inflection point, and that is because of these two use cases where the adoption will be in billions and the value and the asset in circulation or the tokenization will be in trillions. And that's a true measure of, any technology being adopted by mass. The problem which we have seen, one thing, because blockchain is a back-end infrastructure technology, unlike metaverse, as you say, unlike other technology, it does not have a user interface. Okay, it's more like it's more like cloud. So cloud everybody uses, everybody is impacted, but as an end user, I am not feeling it. But with these two use cases, end user will feel it actually with the CBDC and tokenization, and then and these two are actually in my opinion, has the potential to, change the game for the blockchain.
Thanks, Shehzad. I think we'll all agree that AI has changed the way we work, and it seems that the market size today of AI is more than 20 billion. So I think every bank or every financial institution is using AI in some form. I would like to ask a little bit more controversial question, because we have been hearing a lot about ChatGPT, and some industry leaders have said that it has to be halted for 6 months or so. So let me ask Avinash, on this particular technology, what are your views? And then anyone else who's wanting to speak on this, because I think this is a hot topic everybody would like to hear.
So generative AI, on the backbone of which this entire GPT is out there, there has been work going on this for the past several years. And to the point which Shehzad was making, what has sort of brought this to the forefront right now is the fact that, okay, there is a chat element, which has come on top. The user interface has basically enabled GPT, generative AI, to sort of reach the mass market. And that is where, this entire buzz around the same. Otherwise, it's fairly easy, there are tons and tons of literature out there which will basically tell you that, okay, companies like Google, IBM, etc. have been working on generative or similar technologies, for the past very many years. I am extremely bullish on this.
Bullish on it?
Absolutely bullish in terms of, where AI can sort of take things. I am, obviously there's a good actor and there's a bad actor to virtually everything. I mean, even without AI, and I believe, there will be some discussions around risk and security, etc. That obviously is a big concern area, but let's look at the enablers over here, right? I mean, AI allows us to churn data at a humongous speed. It allows us to interpret data fantastically. I mean, just all of us during the pandemic were used to, say, video conferencing, right? And post the conference, I mean, we used to have people taking copious notes and stuff like that. It's a matter of another 3-4 months, the moment it sort of, comes down to the mainstream. I mean, this technology will essentially allow, the entire minute taking to be automated. It will allow the entire thing to be converted. You will have your actionables coming out. And you might even have a scenario where it can sort of, convert it into multiple languages. Okay. Now, these are the kind of stuff which will be taken over by the artificial intelligence and the power of artificial intelligence. I am a firm believer that change is inevitable. I mean, we have got to be prepared for it. And frankly, in financial industry as well, I think everybody is going to be, if they have not already started, I mean, everybody is going to be embracing the same. Okay. The ability, as far as AI is concerned, I mean, it is profound. I mean, right now, very early days, and obviously, most of these require a chipset which is may need to be imported to the country. I mean, data residency and those aspects will come in, but it's going to be a game changer. Everything. I mean, the way we do ops, the way we do credit, the way we do sales. I mean, I think massive opportunities out there.
Thanks. In fact, I second saying that the good that can come out of AI, right, far exceeds the bad that can ever happen from it. However, you know, be it CBDC, we heard the earlier conversation, the earlier discussion, be it CBDC or be it AI, right? The larger risk, and you alluded to risk there, is how do you use this data? How do you use the currency? How do you regulate it, right? You know, in fact, I was just reading today morning that Mr. Altman, who's the CEO of OpenAI, he is representing in front of the Senate committee today to bring forth regulation on OpenAI, basically AI and GPT. So the only issue that I foresee, and that we should, it's just a word of caution that we will have to bear it in mind, that if there is a currency, the central bank would need a certain amount of regulation and control over it. If there is data, for example, is today very cheap to acquire, right, but very expensive to keep and store and secure if you don't know what to do with it. So on one hand there is currency, on the other hand there is data that can easily translate into currency, for an organization. But in both cases, we need to be very cognizant of the fact that if you let any of these run amok without the kind of regulation that a central bank would want to kind of bring in, or a central regulatory authority would like to bring into data, then we might see a flip side of the advantages that we are now talking about. So it has to be a balanced understanding of what the pluses and the minuses are, and just flank the minuses in order to bring out the best of the advantages that both these technologies bring in, right?
Yeah, I agree with both the panelists, co-panelists actually, that AI benefit far outnumbered, any the disadvantages which we are hearing. Okay, that's and the second thing which which you mentioned actually just now about the crypto and this. There also our view is also the same actually, that the crypto, because CBDC, when we talk about the CBDC, it's ultimately a currency. It comes under the realm of the money, which is the prerogative of the central bank, or you can say government, okay, or to be precise, the central bank actually. And crypto on the other hand is like, okay, as you know, it has different use cases. It can be a growth driver, innovation driver for, innovation driver only that, but it cannot be the main source of exchange, which the money actually plays the part. It can never be, and we also totally agree with what our central bank's view is. And I'm sure when the CBDC comes, there will be tons of data, and since it is by the central authority, it will be in the safe hand. There will be the volume of the data which will be generated will be huge, but at the same time we are quite hopeful and quite assured that it will be actually in the safe hand, and it will be not, so it will be dealt with firmly.
From a developer's perspective,
Yeah.
what are your thoughts? Is your company investing in ChatGPT, and how do you see the future of ChatGPT from the software industry point of view?
Very well. So first of all, I'll
The
come
reason
back.
I'm asking this
Yes.
is I'm part of many NASSCOM, WhatsApp groups,
Yes.
and I see some heated discussions there. So actually, I thought we'll have a heated discussion here too, but seems everybody is agreeing.
Yeah. So I'll give you my take on that. I think first of all, on a platform for someone to say we already have a solution on ChatGPT that can be endless boundaries is just another sales brochure generated by ChatGPT on behalf of one company. So I would say, first of all, importantly looking at artificial intelligence, and that has been mentioned on the panel from the bankers, is the fact that artificial intelligence originally has come in from years ago on the capability to assimilate and analyze huge volumes of data. That's the primary challenge that you require to address, given that if you have, let's say, 150 billion UPI transactions happening at that rate, you don't have a mechanism of surveillance on that fact without artificial intelligence. So that's one primary objective of what AI will achieve. But when you go to the other aspects, whether it is, let's say, fraud detection, or whether it is anti-money laundering, or whether it is, let's say, credit decisions, etc., AI is going to lend a huge input on that. But I want to take it to a separate instance from a perspective of ChatGPT, and it's my personal opinion, and I think that can be overbearing on what my company also thinks. That when you look at ChatGPT, it will democratize freedom of expression from a perspective of what tags you're given. So you're not setting the context, you're setting the content. When I am making a presentation to somebody, the reason I will get selected today is because of the quality of presentation, not my underlying performance of the company. If I were to give analyst views in being a public company, let's say, it is about saying how I've impressed the analyst with my content, probably not necessarily all the performance objectives being looked at. What ChatGPT gets is the ability of this freedom of expression to get democratized, where anybody can just put the context, the tag, and it will generate a effectively impressive output that he can present to someone to impress. So that's my take on ChatGPT per se. But if you look at the concept of generative AI, it has been something that is maturing over a period of time. A few examples I can tell you is that there are video-based generative AIs that can take a script and generate a movie with different characters. Considering that we are now going to a point where you will have AI-driven avatars which can lip sync, you might have movies that will be completely done by scripters. You don't need a producer, a person writes a script, puts it through this tool, is generated a movie. That's going to revolutionize how entertainment industry works. Now think about how generative AI can impact industries. It will create, like I said earlier, it is almost a Web3 sort of an enablement, and that will motivate people to drive a creator economy. The person whose intelligence is driven will be the one who will benefit. Last example I want to give on that very quickly is today you see the big techs making a lot of money, and this has been something that Australia addressed, that if you have a news that is published, the journalist that created that news, the agency that paid the journalist should get the credit for that news, not the firm that sort of lent it to the last mile because it had access to a spider and just picked it up. And that is something that is necessarily in ChatGPT, if I would say, in terms of a regulation, that the concept of creator economy is important.
We'll just have the last round of time. Yeah. I'm mindful of time, 10 minutes is there. So one last question to the panel, and I would request you to keep it really short, 30 seconds. What are the big risks you're seeing? Because we had Arpit ji, who was the chairman WIRC earlier in the day, mentioned cyber security. So quick 30 seconds starting.
Yeah, absolutely. Bang on, right? It is data security, it is privacy, and it is cyber security, because all these models get trained on a vast amount of data, and that data is personal information of some customer standing somewhere, right? So from a banking point of view, I think maintaining that privacy, that security is of utmost importance. Because we will need that data to, train these models, train the cognitive AI, and train the other, technologies, but we cannot risk it.
Yeah, so, I don't think anybody can disagree with what we just heard from Anshuman, right? I mean, cyber, data, all of these are going to be super critical. I would add, from a banking standpoint, from a technology service provider standpoint, resiliency is also one big item over here, right? I mean, we are living in an interconnected world. We are living in a world, especially in a country like India, where volumes are just doubling, quadrupling. It's in a matter of quarters, and which effectively means that, not only the technology pace, but the growth in terms of the investments which is happening to the underlying backbone infrastructure is equally important. And this is the commitment that I think all banks have to their customers, all service providers have to their customers.
Thanks. Jinesh?
So I'll not touch upon cybersecurity, but in terms of tech, I think customers as well as government infrastructure is evolving. Therefore, critical for financial institution to agree and accept that, technologies will continue to obsolete. There is a shelf life. Pace of innovation is ever increasing, and we will have to continue to transform. Digital transformation is a journey. It's not an end state. Therefore, embrace it in your investment philosophy rather than taking it as an expense. So you cannot have fatigue to say that, we have spent so much, what is the ROI? This is a hygiene factor. It is a driver of the business, not an enabler of the business anymore.
Sure, thanks. Rajesh ji?
Yeah, my point on that would be data privacy, because the rest has been addressed by the panel members. I think it's important that consumers today feel that, if I have taken a loan from one entity, then how come 5 entities call me with that same information? And that would typically have a bearing on a lot of data that is there in corporates and elsewhere, which speaks about a clear need to address data privacy. So I think the concept of how Web3 will evolve a digital ID, and importantly the data belonging to them and having consent to distribute that, is going to be a very critical factor.
Shehzad?
I can hardly add, anything else, but except one thing, I worry that it should not leave there should not be digital divide actually between the people who adopt and who has the capability to adopt and those who can't adopt. So it may lead to some kind of digital divide. That's is my worry, nothing else. And I can't add anything further.
Thanks everyone. Now the floor is open for questions. Narendra.
ESG is becoming very important, and 1,000 listed companies, business responsibility and sustainability reporting is compulsory. So how the technology will be enabling banking sector plus the corporate sector and our technology man, how you are helping in the measurement and as well as the proper reporting. Other side, even green bond, no, when they if they don't utilize, there will be green washing. So in that also, how the technology? That is my question.
So I'll start with the answer, given that
Short, like only one person answer, so that
given that we are into ESG reporting solutions, and we've seen the background of how ESG will eventually get regulated. It's currently the willful disclosures that is there even in the current standards of regulation. And that's originally how every regulation starts, saying let's see what you have to say and then let us tell you what we want to know. It will go to that stage. So in ESG reporting, I think there are pillars which are contributing to how people would report, whether it's scope 1, scope 2, scope 3, scope 4. And the concept is about saying, are you generating carbon footprint? Are you carbon neutral? Prove that. Are you then creating carbon credits, and how that works? There are several advantages, and I think a few incentives need to be put forth for proper ESG reporting before saying you've got to do it. Unlike AML and various other regulations that came in, there was nothing like an incentive put in, but it was saying that you've got to do it because it's a law and order situation or a terrorist combating situation exactly. In ESG, it is the reverse. There has to be an incentive, and I think those concepts are they're important. For example, a bank raising green finance will have to say that, give me all these following factors that prove that the finance is qualifying for green. An important part, yeah, exactly. So that there is a credibility to how you've lent, and there is a reason for the sponsor to give that. Importantly, there are industries who actually create carbon credits, and there has to be an active incentive to them in their returns itself while filing to say that yes, you have generated carbon credits as the nature of your business itself, and hence we will honor those credentials to you either in terms of tax credits or whatever. And that has to be automated by similarly for those who created carbon footprint. Likewise. The other aspect is that individual institutions need to have the education to say, when you are talking about ESG, like for example, when I fly today to any country, the option is there for me to say that I will offset my travel through the ticket price. Now this has to evolve across the board, across institutions, whether they belong to whatever scope in terms of the industry. And lastly is the fact that in terms of any regulation, it has to start from top to bottom, not bottom to top, because that makes it sustainable. So I think industry already, there are, the BSE for example has a disclosure policy on ESG, but if that gets regulated by government policy to say what we mean by ESG, it will be in fact a healthy contributor. If we look at the carbon neutral stance taken by India for 2030, there is a point to say that the 1.5 degree target, etc., those can be achieved with effective reporting.
Thanks, Rajesh. I think there is a lot of activity on the taxonomy which is getting built. Yeah. Rajji,
Okay, yeah. So the question is, given that technology is moving so fast and faster than you want it, and it's not coming in the right order, what do you think banking will look like in 2030? And I'll just set a context. 5 years ago, when I was the president of IMC, in my address, I had explained that CBDCs are going to come, and this is going to change banking significantly. But after the talk, 3 old school bank chairmen met me and said, oh, this is all narcotic stuff, nothing is going to happen, at least for 30 years. But I'm glad I'm talking to bankers with technology background. So could you explain to us how completely banking will change, even because of 2 technologies, CBDT as well as, say, large LLMs?
Jinesh, will you take that?
Sure. So, the LLMs, the generative AI and other models we'll be talking about. See, the AI, if we, for the lack of better word, called traditional AI, has enabled, banks, financial institutions to understand the customer patterns much more, and by applying machine learning algorithms, our ability to acquire as well as underwrite customers and serve customers has helped quite a lot. Which means that, while cost of acquiring and cost of acquisition underwriting has come down, it's easy to serve to the customers who were difficult to reach out. So it has certainly helped in financial inclusion aspect, because to the same customers, you are unable to serve. Similarly, if you take example of MSMEs, for example, right? MSMEs have traditionally been credit billion credit cap, but because of all the online platforms, whether it is Gati Shakti, whether it is ONDC, whether it is GM Sahay, the number of digital footprints each MSME is leaving there, and kind of digital pulls that you can do from multiple systems enables them to access credit. And that's what the impact technology is creating at a very low cost to an MSME at a very small ticket size. The loans which were earlier unable to be extended, now they are being able to access this. So that's the power, technology as a whole, and specifically AI. AI, if we talk about generative AI, ChatGPT, etc., our customer service experience is going to be phenomenally different now. All of us have been frustrated by talking to bots, talking to automated, call respondents. Generative AI is going to change that very soon, and there are experts, to talk about that. For CBDSE specific, let me hand it over to Shaja.
Jinesh, I think, sorry.
Over lunch, maybe we'll do that discussion.
Running out of time, I'll take one last question, please.
Hi, Junite from Money Control. So I cover banks and finance. So what I've observed from COVID-19 years is that more and more customers are adapting to digital services from banks. So what has that led to is that more and more volume of customers coming to banks' websites and apps, which has eventually led to these platforms crashing at times. So how do you think that banks are working on these things? Other than partnering with fintechs and tech companies, how do you think that banks in the coming years ahead, since we're looking at tech is becoming a big part, how will it work around this thing?
Anshuman.
See, we have to evolve our legacy systems. All banks have legacy systems that have been acquired at various points in time to serve various purposes, right? Upgrading them or keeping in mind, how your traffic might flow is an important ingredient of the overall IT strategy of any organization. Specifically so with large banks, because there's this huge amount of data that, that flows into the bank. So that is a constant endeavor for all banks, that they will invest, significant effort and energy and investments to keep their core systems upgraded, so that these unwarranted crashes or whatever do not happen.
If I may add, the answer lies in technology itself, right? Aside from the modernization of the core, which Anshuman just mentioned, every entity out here is also looking at, a lot more stable service providers like cloud, etc., right? Where you can actually sort of, move away from the constraints that you have on premise. So from where we used to be 3 years back, the volumes have only grown, but banks have actually tried to keep pace. And I think it's a matter of another 18 months. The technology itself will, help provide a solution for this.
Thanks. I think we have completely run out of time, but the panel is available. I'm sure during your lunchtime, if somebody wants to, chat up with them, they are available. I will close by this quote from James Canton, which says, "The future of lives, of our work, our business, and most of all, the future of our world depends on us gaining a new understanding of the dizzying changes that lie ahead. I call this future readiness. And I think that's where we should all be looking at. Thank you. I'll thank each of the panel members, and I thank the audience for their wonderful, receptive way of. Thank you.
Thank you for that very informative session. May I now request Shri Madhav Nair to present a memento to Shri Anshuman Bhaduri as a token of our appreciation and gratitude. May I request Shri Madhav Nair to present a memento to Shri Avinash Raghavendra as a token of our appreciation and gratitude. May I request Mr. Madhav Nair to present a memento to Shri Jinesh Jain as a token of our appreciation and gratitude. May I request Shri Madhav Nair to present a memento to Shri Rajesh Mirzankar as a token of our appreciation and gratitude. May I request Shri Madhav Nair to present a memento to Shri Shehzad Fatmi as a token of our appreciation and gratitude. May I request Dr. M. Narendra to present a memento to Shri Madhav Nair as a token of our appreciation and gratitude for a wonderful moderation.